Welcome to CSIS Online. The way we bring you events is changing, but we'll still present live analysis and award-winning digital media from our Dracopolis Ideas Lab. All on your time, live or on demand. This is CSIS Online.
Good afternoon and good evening to friends in Europe and Japan. My name is Matthew Goodman. Welcome to this CSIS virtual event on digital currencies and the international monetary system. Delighted to have you with us. We have a terrific lineup for the next hour and a half or so, starting with my colleague Stephanie Siegel introducing the Undersecretary of the Treasury, Brent McIntosh, and the Vice Minister of Finance in Japan, Kenji Okamura. Delighted to have them with us, and then a panel of experts moderated by our partner, Phil Middleton at OMFIF. Thank you to OMFIF for being our partner through this research and work that we've been doing on digital currency. Extremely helpful. They're really the pros on this topic, and we've been delighted to partner with them. Thanks to the Ministry of Finance for their support for this effort, which has been very fulfilling and rewarding for us, and we hope for others who have been participating. Financial innovation and digitization are not new topics, but it feels as though we're in a moment here on digital currency that there's something big happening or about to happen. And we are very interested in understanding what the implications of that are going to be for governments, for monetary policy, for the international monetary system, and for users, commercial banks, and ordinary users of currency. So this is a really important topic, and one that frankly in Washington is not well enough understood except by real experts. So we're hoping to widen the lens and give a broader audience some insight into this. So with that, I'm going to hand over to Stephanie, a senior fellow in the economics program at CSIS, to take it from here. Thank you for joining us.
Great, thanks so much, Matt, and welcome to everybody for joining. Let me just briefly lay out the run of show for today's event. It's actually an event in two parts. We're going to start with an armchair discussion, as Matt mentioned, with the Undersecretary and the Vice Minister. That's going to go until about 8:40, at which point we'll transition to a panel discussion to get into some of the more detailed aspects of digital currency. That'll run until about 9:30 with Phil Middleton moderating. Just very briefly before I make introductions here, on the topic of digital currency and the international monetary system, there are many aspects to the topic of digital currency. They range from financial inclusion to digital identity and privacy protection to the technologies that drive the digital platforms. They're incredibly important aspects, and I'm confident that our panelists are going to get into some of the details there. For purposes of this virtual armchair discussion with the Undersecretary and the Vice Minister, we're going to focus on the global implications of digital currency developments, including what those developments might mean for currency usage and for the international monetary system. And given that focus, I'm just thrilled that we have the two guests have agreed to join us for this armchair discussion. Let me just introduce them briefly. Kenji Okamura is Vice Minister for International Affairs at Japan's Ministry of Finance. He has a long and distinguished career, including stints at the International Monetary Fund and Japan's Financial Services Agency, where he served as the Deputy Commissioner for International Affairs. In recent years, he's held senior positions in the International Bureau of the Finance Ministry, most recently as Director General of the Bureau. And in these capacities, he's represented Japan in numerous international fora, including in the context of Japan's G20 presidency in 2019. Brent McIntosh is Undersecretary for International Affairs of the US Treasury. Prior to his confirmation as Undersecretary last year, Brent served as the department's General Counsel. And prior to his Treasury service, Brent was a partner with the law firm of Sullivan and Cromwell, where he was a member of the firm's litigation and financial services practice groups and co-led the firm's cybersecurity practice. Mr. McIntosh also served in the White House from 2006 until 2009, and at the Department of Justice from 2004 until 2006. So very briefly, these two gentlemen head up their respective agencies' international operations, so very big jobs, and we're very appreciative that they've agreed to join us today. So let me now jump right in here with the substance. And I want to start with a very general framing question on the topic of digital currency. And notwithstanding the broad nature of my question, I'm going to ask if you could limit your initial comments to about 5 or 7 minutes. And then we're going to have some time for discussion. So with that, let me ask you first, Kenji. And the question is, how are digital currency developments driving policy discussions in your respective capitals? Why is it that digital currency has attracted the attention of policymakers, and in particular, policymakers that are responsible for international engagement? Kenji, to you first. Kenji, I think you're muted. Yeah, if you could just unmute.
Okay, now.
Great.
I unmuted, okay. Yeah, thank you, Stephanie, for your very kind introduction and letting me to know how to unmute the microphone. And this is my great pleasure to be a part of this prominent event to discuss digital payments. I'm very excited now. Mainly because the issue is so timely and important, but perhaps partly because this is named Armchair discussion. The naming Armchair is so new, unique to us, particularly very new to us Japanese. So there has been a very heated discussion among us in Tokyo on how I am supposed to sit. And in the end, it turns out it really doesn't matter because it's in a virtual setting. And coming back to the substantive issues, responding to the kickoff question of Stephanie, let me start off by going back to the G20 and the Japanese presidency last year. We set the issue of digital payments as a G20 priority agenda. The underlying idea of us was that let us finesse potentials brought by technological innovation while properly addressing risks involved. Just before summer, Libra would become operationally ready in the near future. Driven by concerns about its significant risks to stability of the international financial and monetary systems, Japan put it on the G20 agenda and achieved an agreement that we closely monitor developments and remain vigilant to existing and emerging risks. In October last year, G20 adopted its consensus that no global stablecoins and other similar arrangements. No global stablecoins and other similar arrangements should commence operation until relevant risks are adequately addressed. And this consensus is still valid now. And Facebook has decided to delay Libra launch and changed Libra's backing from a basket of currencies to a single currency, such as the dollar or the euro. And during the course of discussion on GSC's global stablecoins, there was growing attention on two digital currencies issued by the public sector. That is called central bank digital currencies, CBDCs. And Japan broadened the G20 agenda to include CBDCs and payment systems as a whole. And then the COVID-19 shocks particularly amplified public attention to this issue of digital payments, as you know. And now as the prospect of GSCs, global stablecoins issued by the private sector, has somewhat receded, CBDCs attract an increasing attention. Now central banks around the world, including the BOJ, Bank of Japan, are now seriously studying the challenges around CBDCs. partly triggered by the debate of GSCs. And these efforts by central banks toward possible issuance of CBDCs are a welcome development because it is a promising way to harvest the benefits of technological innovation while addressing risks involved. Steady progress has been made in the work of FSB and the G7. And I'm sure Brent, as a chair of the G7 deputies and the FSB's RIS is regulatory issues of stablecoin working group. So Brent is the best person to elaborate on these positive so-called developments. So leaving these bright or positive aspects to Brent, let me turn to, I wouldn't say negative, but let's say darker or maybe deeper aspect of the same issue. Namely, I would like to draw your attention, taking this opportunity, to the potentially significant risks posed by a specific type of CBDC. Let me tentatively name it as idiosyncratic CBDC. I mean by idiosyncratic CBDC that CBDC that does not possess features critical for ensuring stability of the international financial and monetary systems. Digital renminbi could be an example typically to make you understand my issue. Though, of course, the digital renminbi, its exact nature is still unknown. Around these idiosyncratic CBDCs, let me offer three features now at the outset of the discussion. First, strategic competition over hegemony. China may be advancing its CBDC project relatively fast, presumably aiming to take a first mover advantage. Second, widespread use of idiosyncratic CBDCs would pose serious risks. Non-exhaustive list of risks includes privacy and consumer protection risks due to vulnerabilities to cyber attacks and state monitoring of people's behaviors. And operational risks due to weak safeguards of data and less transparency. Financial integrity risks such as money laundering and terrorist and proliferation financing. National security implications, macroeconomic stability risks, and ultimately, threat to the US dollar as a key currency and the existing international monetary risks. Third point is our fellow central bank colleagues. Our fellow central bank colleagues tend to feel uncomfortable to discuss these idiosyncratic CBDCs. More specifically, they do not want that their well-intentioned efforts are undermined or discouraged by being mixed up with something strange that involves strategic aspects. So with these features in mind, how could we address these risks posed by idiosyncratic CBDCs? Starting point would be being aware of these serious risks arising from possible developments of idiosyncratic CBDCs and making clear distinction between idiosyncratic ones from other distinction between idiosyncratic and other well-intentioned ones. Then my preliminary thoughts suggest setting a goal of the international cooperation at achieving some common understanding about requirements for desirable or acceptable CBDCs. The key word here, in my view, is good design and clear governance support. And international cooperation should play an important role, and bilateral cooperation between the United States and Japan is at the core of the G7 coordination. As always, three possible targets to address are potential issuers, potential users, and the international community, including international organizations, as well as prominent think tanks, notably CSIS. I stop here now. Thank you very much.
Thank you very much, Okamura-san. And there was a lot in your comments that we will have time to follow up on. But before we do that, if I could pose the same question then to the Undersecretary and ask about Treasury's key priorities and policies when it comes to digital currency, where there are similarities or maybe differences from what you just heard from Okamura-san. Brent?
Great. Pleasure to be with you this morning and with Matthew. It's always great to be with Treasury Department alumni, and it's terrific to be with Kenji this evening, his time. I feel like you may be getting tired of seeing me at this hour. I feel like during the pandemic, after breakfast my time and after dinner his time, we see each other pretty regularly. And thanks to CSIS and OMFIF for putting this together. I think it's a very worthwhile topic. So stepping back and looking at the question of why digital currencies are in the news these days. There's little question that the financial system and the payment system especially has certain shortcomings and pain points that in terms of cost and efficiency, speed, and inclusivity that can be addressed through financial innovation. Financial innovation has the potential to remedy those, and that is driving demand for digital currencies, digital payments, financial innovation. But the advent of these new technologies raises what I think are age-old questions around the role of public and private sectors in the provision of money, the creation and movement of money. And the debates in this space they're debates that played out over centuries, but they're debates that now are happening very fast because of the pace of technological innovation in this space. Historically, private companies have not been ideal at providing currencies. They tend to be very good at innovation, and we're seeing that even today, that they are very good at innovation. Innovation is moving at a rapid pace. It was moving rapidly before the pandemic and has continued to pace during the pandemic. On the other hand, private companies tend to have very different incentive structures from public authorities in terms of accountability and their obligation to the public. So for example, they have different incentive structures when it comes to preserving the value of money. They have different incentive structures when it comes to providing liquidity in times of stress. And so the market stresses during the pandemic, I think, have brought those sorts of questions about incentive structures and accountability very much to the forefront, and have reminded people very much of the importance of finance ministries and central banks in the provision of money. So naturally, both within countries and outside countries, there's been a great deal of discussion about the digital payment space. If you just looking internally to the United States, there are intensive discussions going on among the various financial and economic agencies here. So about the digital payments space and about digital currencies. That's everything from cryptocurrencies to stable coins to central bank digital currencies. There's discussion of what our view of these are, what regulatory requirements should be in place, how we should react, what our view of these developments is as a matter of the monetary policy and monetary sovereignty of the United States. And so there are intensive conversations going on with Treasury and the Fed and the SEC and the CFTC and the OCC, and also the FinCEN with regard to money laundering and proliferation issues. There are so many different aspects of these developments that it plays in the within the jurisdiction of a lot of different agencies within the United States. And so coordination across those agencies has been important to developing our view. Similarly, because of the possibility of the cross-border nature of these the issues here, we've had to interact very closely with our international counterparts. And so, you know, Kenji and I feel like we discuss this with each other pretty regularly. We discuss it in the G7, of which the United States is the president this year. It has arisen at the G20, where the Saudis are the president this year, and where the Japanese were recently the president. We discuss it in the Financial Stability Board, which is particularly charged with questions of potential financial stability effects from digital currencies and digital payments. Because there are, if you look at the places where there are potential consequences, they span a variety of different values and interests we have here. So for example, you know, there are potential financial stability concerns we need to be addressing. We don't see financial stability risks at present, but we should be looking at those questions as we move forward. Similarly, there are monetary policy and monetary sovereignty concerns. There are consumer protection concerns with many of these innovations. There's data privacy concerns, which we can talk about later with regard to central bank digital currencies. There's cybersecurity concerns, and then we're very focused, and Secretary Mnuchin has been very focused on the potential money laundering and terrorist financing and other financing of illicit activity that has the potential here, and making sure that these financial innovations, which can have real benefits, are done in a way that is responsible and consistent with the regulatory imperatives, the age-old regulatory imperatives that we think need to be carried out in this space. So I'll pause there and thank you for letting me go on.
No, great. Thanks, Undersecretary. And both of you, I think, coming at the issue from different perspectives and different angles, but I think you, in your comments, underscored both the complexity of the issue and the number of players, both in a domestic sense and then in an international sense on this issue. But let me stick with the international side. Let me follow up on something that you just mentioned, Brent, on the international coordination piece of it, and you and Kenji both mentioned the G7's work on this topic. Kenji mentioned Japan's leadership on this issue when they were the G20 chair. We know that the Financial Stability Board, the Bank of International Settlements, the International Monetary Fund, a number of multilateral entities are working on this issue. My question to you and then to Kenji is, from a Washington and Tokyo perspective, what is the quote unquote right forum in order to get agreement on some of these requirements that Kenji mentioned, requirements for a digital currency that preserve stability? What are your views on where that should be taking place?
You want me to take that, Stephanie?
Yeah, if you could start, Brent, and then I'll ask the same question of Kenji.
Great. So it's true that there are any number of international fora, multilateral groups working on these issues, because they do, as I laid out the series of different considerations, a number of them are charged with different aspects of that. So for example, and so consequently, they actually sit at different places within the international system. If you look at the Financial Stability Board, for example, the Financial Stability Board has been very focused on the ensuring that as these technologies develop, we have a handle on what potential financial stability consequences they might have within countries and across the system. And so last year, the Financial Stability Board, with the advent of so-called stablecoins, put together a group called the Regulatory Issues and Stablecoins Working Group, which I chair along with Durjun Chia of the Monetary Authority of Singapore. And we've been working for over a year on developing a set of principles, high-level principles regarding the regulation and supervision by national authorities of stablecoins. And that report will be coming to the G20 next week, the G20 meeting next week. the meeting of the finance ministers and central bank governors, I should say, with 10 high-level recommendations for the regulation and supervision of stablecoins on an international basis. You know, things like, for example, if a digital asset is performing the same function and presents the same risks as a more traditional asset, it should be subject to the same set of rules to ensure that those risks are managed. Similarly, as Kenji referenced with regard to the prior work on stablecoins, a digital asset shouldn't launch in a jurisdiction until it is able to comply with that jurisdiction's regulatory and legal requirements. And moreover, we see a need, which we've identified through that report, for robust international collaboration because of the inherently cross-border nature of these digital currencies and digital payments. And there's going to be a real need for continuing international collaboration to ensure that what one country decides does not prejudice another country, and that we don't create situations of regulatory arbitrage. So there's a lot of work going on there. That's one side. Similarly, in the G7, we have a digital payments experts group that has been looking at sort of broader questions of monetary, what you might think of as more existential questions about money, including the role of public and private that I went through a bit earlier, in terms of the long-term both risks and the opportunities presented here, transparency, the rule of law, sound economic governance, and looking at the questions of how financial innovation, and in particular digital payments, has an effect on those, and where there are opportunities that ought to be seized, and we think there are, and where there are risks that need to be addressed, and there clearly are those as well.
Thanks, Brent. Kenji, is there anything that you want to add on the fora, the various fora for multilateral cooperation?
Okay, because Brent just gave us a very good and comprehensive explanations about what's going on and what kind of efforts are being made by ourselves. I have very few points to add, but from my perspective toward establishing common understanding, or possibly general principles in terms of required features for the desirable CBDCs. I think as Stephanie asked, and responding to the original question, is the right or the most appropriate forum would be twofold. One is first within G7, as Brent mentioned, G7 and other like-minded group. And the core of this like-minded, the coordination between the United States and Japan is at the core. But first we need to start with this G7 coordination, and then spreading to broader group such as G20 and beyond. Let me just add, this is a multilateral channel to discuss this issue, but together with this multilateral things, I think bilateral cooperation need to be addressed at the same time. And as I said earlier, bilateral, I mean here is toward the potential issues, including China, as well as potential users, including surrounding countries or the neighboring countries of potential issuers. Thank you.
Thanks, Kenji. Let me follow up on that, but also get into something that I kind of previewed in my introductory comments, and that is these developments, as we've been discussing, they've been ongoing, but it does feel like we're at a moment where the topic of digital currencies, central bank digital currencies, is moving into a different, maybe more practical phase. And there are these questions about what the impact will be on the international monetary system and what currencies are used in the system. As you both know, the audience probably knows, the dollar is the dominant currency, but the yen also plays an important role, as does the euro and a few other reserve currencies. I was making note of a report that came out from the European Central Bank on the digital euro just last week. And that report actually said that the euro system might consider issuing a digital euro in part to support the international role of the euro. So a lot of the focus has been on the potential for the RMB, but it appears that this is also a factor for other currencies. So if other actors are introducing digital currencies and the US or Japan doesn't follow suit with a digital dollar or a digital yen of their own, what might that mean for the international usage of the dollar, of the yen? Let me go in reverse order here. I'll start with you first, Kenji.
Okay, thank you. First, the question is on the yen or the crossover usage of yen. So let me just start off answering that aspect. And the short answer is I am less concerned about direct impact of, say, potential digital renminbi on the cross-border usage of yen, as yen is much less used than dollar as a means of cross-border payments. We are using US dollar for cross-border payments. So we are keenly interested in its potential impact, cross-border dollar usage, on cross-border dollar usage, and on existing dollar-based order, that order to which Japan belongs to. And this dollar-based order of the international monetary system. And at the same time, domestically, is there any sort of possibility of the substitution effect within the border of Japan? To this question, domestically, given the resilience and robust monetary system in place in Japan, I think the usage of yen is unlikely to be replaced by renminbi in Japan solely because of its digitalization. Let me add one thing. For the renminbi is moving relatively fast at first pace. It's presumably, I said, they are aiming at this, aiming to take the first mover advantage. The first mover advantage here is at the same time what we need to afraid of is first mover advantage could be it's another motivation to speedy action, and this advantage is getting the standards in scheme design because it's a first mover. So the standards in scheme design and technology platform, so which would facilitate further wide adoption of that currency, digital form of currency globally. Thank you.
Thanks, Kenji. Let me ask Brent the same question. And I guess my question, I do want to follow up on the digital RMB point specifically, but my question was even a bit broader than that, kind of referencing this ECB report. And it basically is if there are other entities, whether it's the Euro area or Canada or whomever, that is able to issue a digital currency and the current dominant currencies don't actually follow suit or have their own digital currency, does that then disadvantage the current reserve currencies?
Let me broaden the focus slightly on this because and get to that question. We recognize that many central banks are exploring the questions of central bank digital currencies. And when we talk to our various like-minded partners, including especially Japan, we recognize that there are potential consequences there, depending on the design features, for financial stability, for market integrity, and those are, I want to say, as a member of our finance ministry, those are in particular protected by central bank independence. And so I don't want to get ahead of my friends at the Fed who have spoken about central bank digital currencies and what they're thinking about central bank digital currencies, as central bank digital currencies, as the name suggests, are a new form of central bank money, and they do pose a lot of questions about monetary policy and central bank mandates. So I don't want to get ahead of them on that. There's no question, though, that they do also pose a number of questions for finance ministries around the world, including Treasury, in terms of, we referenced earlier, monetary sovereignty and the strength and credibility of currencies, but as well, there are real issues around bank disintermediation with the central bank digital currency. We talked earlier about AML and proliferation issues. And then there are, of course, questions around data privacy and operational resiliency, which it's a different thing if your central bank knows all the transactions you undertake. And central bank digital currencies in some jurisdictions may not share characteristics that we value in terms of the rule of law, transparency, and democratic legitimacy. And if widely adopted, that would have negative implications for the global financial system. But I also think the fact that some of those governments that are exploring central bank digital currencies don't have those commitments to the values we share actually make a potential central bank digital currency less likely to be widely adopted because of those concerns. There are lots of reasons why the dollar is the reserve currency of the world, and it's not just a question of ease of use. So I think we need to recognize that while financial innovation has the potential to change the picture here, it's not the only thing it's not the only consequence here. It's not the only interaction or driver of the current constellation of currencies around the world. And so while we're watching carefully the innovations that central banks are considering and looking at the implications that they will have for the group of currencies around the world, we have to recognize that there are a lot of things that drive what currencies get used around the world, and it's not just ease of use.
That's a perfect segue to the last question that I had for both of you, and it is keeping in mind that I'm talking to senior finance ministry officials, and that we typically, as a former Treasury staffer myself, we're not technologists. We don't really understand the nitty-gritty of the technology so much, but we do think about macroeconomic fundamentals and things like capital mobility and financial market development in terms of what makes a currency attractive. And it's in that context that there is debate, and now switching to a digital RMB specifically, there's a question about whether technological advances will make the RMB more widely used internationally, if at the same time they maintain more restrictive capital account barriers, and if financial markets, things like markets that allow one to hedge, remain relatively underdeveloped versus the existing reserve currencies. So any comments on whether or not internationalization of the RMB can take place alongside a still restrictive capital account? That's going to be my last question. Let me throw it to Kenji first and ask maybe if you could answer that question and any final comments that'll allow us to transition to the panel. Go ahead.
Okay, so yeah, thank you. And it's true that China has a very strict capital control, but including this capital control, they have some or several, I would say, unattractive features from the unattractive features for international use from the viewpoint of this financial aspect. And the examples are, as I said, capital control and high transaction costs, as well as heavy regulations. However, we need to look at this issue from broader perspective. I mean that outside the purely financial motivation, other motivations could be in place, such as a grant or loan provision, so-called economic cooperation thing, and geopolitical or technological dependence by the developing countries or recipient countries, and say the BRI related strategic considerations. So those things, keeping those things in mind, we need to look into this issue and the risks involved.
Thanks, Kenji. Brent, anything on that specific question, and then any other kind of closing comments?
Yeah, I think you in the question posed many of the considerations that will, I think, make it difficult to imagine in a near-term internationalization of the RMB between the capital controls issues, as well as I think for a lot of us there are data privacy and rule of law issues that have the potential to make it an unattractive digital currency. As I mentioned in response to the prior question, there are a lot of reasons why the dollar is the reserve currency, and those are not going away. So I guess, and I think Kenji made a number of important points on this as well. So I think I'll rest on those points and only say that I'm very grateful for having been able to participate today. And it's always a pleasure to be on speaking with Kenji, and I do congratulate him and his fellow Japanese government officials on their real leadership in this space. They have been an outstanding voice for responsible innovation, and so I commend them for their work in this space.
Great, thanks. So we're gonna wrap up this portion of the program, the armchair discussion, regardless of whether you were sitting in an armchair or a stool or standing for it. But let me just thank both of you for making time for this conversation at either a very early or a very late hour. I mentioned having worked for people that were in your positions. I know how busy you are at any given time, but in particular, given the backdrop and leading up to the annual meetings, I know that there's quite a premium on your time. So thanks to both of you very much for joining us. And with that, we're gonna transition now from this armchair discussion to a panel discussion that is going to get into some of the more detailed aspects of digital currency that both the Vice Minister and the Undersecretary were mentioning. To do that, I'm very happy to pass the baton now to Philip Middleton. Phil is chairman of OMFIF's Digital Monetary Institute. They have been partnered with CSIS in putting together the series of roundtables leading up to this public event on digital currency. In addition to being chairman at OMFIF's Digital Monetary Institute, Phil is deputy chairman at OMFIF. He has a long and distinguished career in the financial services industry. He was formerly a senior partner and head of central banking at professional services firm EY, where he specialized in strategy consulting and services to governments and other public institutions across Europe, the Middle East, India, and Africa. And so with that, I'm gonna pass to Phil, and Phil is going to introduce our panel of experts. I hope very much that folks can stick around for this part of the conversation. I'm definitely looking forward to it. Phil, with that, over to you.
Thank you very much, Stephanie, for that introduction. We now move from the global policy titans relaxing in their armchairs to the worker bees sitting on bar stools with a pint of best bitter in front of them to pick up some of the crunchier issues raised. I thought that was a fascinating discussion, Stephanie. I particularly struck by the Vice Minister's coining of a new phrase, the idiosyncratic CBDC, which I think is wonderful. And I was interested in the Undersecretary's apparent liking for the SHC, the synthetic hegemonic currency, which former Bank of England Governor Carney floated at Jackson Hole last year. So I think a lot of interesting elements there. I think there is a real question as to whether the international coordination and cooperation can keep pace with some elements of national self-determination and private sector profit pursuit, which may be creating new realities before the various international financial bodies have had time to put their boots on. And that's something I hope this panel is going to have a look at. It's interesting in last week's ECB report that not only does the report look at the possibility of a digital euro being a reserve currency, but it also in passing mentions the ability of a digital euro possibly to protect, in inverted commas, the European Union from other people's payment systems. So interesting to speculate whether CBDC, digital currency, becomes an element of international cooperation or indeed an area of fierce international competition and potential dissension. But enough from me. I'm the traffic lights, not the traffic, and I have three outstanding panelists to give some views today. We'll start with Tommaso Mancini-Grifoli, who is Division Chief of Payments and Currencies and Infrastructure at the IMF, a wholly newly created role and very much the 30,000-foot view of the global financial services system, of global financial architecture, and how that's all going to mesh in to digital currencies, whether they be M0 or M1. We'll then move to Naveed Sultan, and Naveed is a giant of global payments because he heads up the Treasury and Trade Solutions business for Citibank, or Citi. Apologies if I get the precise terminology wrong, but clearly this financial services group is one of the major players in the global payments industry, bar none, and is moving currencies, assets, instruments around the globe in the billions of dollars on an hourly basis. And then last but not least, Nea Narula, who is from the Massachusetts Institute of Technology, where she heads up a media lab looking at blockchain, cryptocurrencies, and CBDCs, and they have recently announced an innovative collaboration with the Federal Reserve of Boston, the Boston Fed, to look at CBDC, some of the technical implications, some of the policy implications. And that would be interesting. I have to say, in brackets, I find it quite interesting that it's a regional Fed that's operating at this level and not across the board, but that's another question. So we'll kick off with Tommaso. If you have questions, by the way, there is a chat function, a question function on the Zoom screen, so please send them in to our team and we'll try and deal with as many as possible. But I'd like to ask Tommaso to kick us off. Do you think there are some people, Tommaso, who think the global financial system is, particularly the Bretton Woods system, is on its last legs, it's about to collapse, and the threats of nationalism, technology, innovation, and various other things are leading us to a new revolution in international payments, which is going to make the world look very different from today. How does the IMF see this?
Thank you very much. Do you hear me well?
Perfectly, thank you.
Very well, very well. Thank you. So it's a pleasure to be here with our friends from CSIS and OMFIF. The question is evolution or revolution, I suppose. And maybe I can start by being more concrete, and then we'll work our way up to the 30,000 foot view, as you were suggesting. So we had this debate at the IMF, and with a group working under the FSB on improving cross-border payments. And in this group, we came together to think about what the main frictions are in cross-border payments, what solutions are possible, and what sort of roadmap we could put together in order to offer concrete solutions and a timeline for improvements. And what is interesting is that these solutions really fall into two buckets. One bucket is marginal improvements to the current system, and another bucket is more exploratory solutions, more medium-term type solutions, which you might call more revolutionary. So we at the IMF were very keen on working on these two fronts. We called it the multi-pronged approach. We always need a good name for these things. And multi-pronged approach is essentially, again, improving while at the same time thinking about exploratory solutions. Why? Why? Because it's very hard to pick technological winners. It's very hard right now to say, well, the world is going to look like this in 5 or 10 years, therefore we need to prepare. Technology is moving very rapidly. It's hard to put all our eggs in one basket. It's also very important that we work on solutions that will matter and that will make a difference for a large set of countries. And countries are very different here relative to their policy objectives, relative to their capacity, relative to their infrastructures, existing infrastructures. And so it's important to work on a variety of solutions. So the type of evolutionary solutions that we've been considering are things like connecting existing payment systems between countries, and that will obviously only work for countries or block of countries that trust each other very much. Improving messaging standards, trying to deal with the problem of non-overlapping hours of large value payment systems. These are the types of evolutionary solutions that are very, very important to make improvements to cross-border payments. The more exploratory solutions fall under three buckets. The first is interoperable CBDCs. What happens in a world where we have multiple countries issuing CBDCs, and can those be used to facilitate cross-border payments? The second is global stablecoins, after all. So conditional on these strictly satisfying all the regulatory and legal requirements, might global stablecoins offer improvements to cross-border payments? And the third is the establishment of multilateral platforms that might help, especially low-value payments such as remittances for countries that are being de-risked or left out of the correspondent banking networks. What I think is very interesting here is the importance of cooperation. So if we are to think about CBDCs becoming interoperable, or becoming solutions to cross-border payments, they must be interoperable. And interoperability means probably many different things. It's interoperability at the legal level, at the technological level, at the functional level, so that if I receive a central bank digital currency from another country, I can redeem it in local currency to make payments. There are questions of standards. How do we establish these standards? Who should establish these standards? Whether the private sector should be involved in doing so. So cooperation is really a key element of finding a solution. So we've spoken in pretty concrete terms, I think, about these types of solutions, but of course, it's important to recognize the international implications of this. The previous speakers touched on this, the macro financial implications of digital currencies being available across borders. And we are concerned at the possibility of much more widespread currency substitution. That is, in countries with weak currencies, so high inflation, volatile exchange rates, etc., the level of currency substitution potentially increasing rapidly by several notches if digital currencies were available across borders. So if the types of CBDCs or global stablecoins that we were just speaking about as potential solutions to cross-border payments become a reality. And in those countries, we might see a painful loss of monetary policy independence, especially if business cycles are not aligned between the country issuing digital currency and the country receiving it. There are, of course, further problems that come into play if we consider global stablecoins that are denominated in their own unit of account, but that's a whole different story, and I close the parentheses there. There are also issues of countries being able to control financial conditions. Most of our member countries manage their capital account to some extent, so rely on some form of capital flow management measures. How do these countries continue to manage their capital accounts in a world where we have digital currencies that are interoperable across countries? I think you said it very well. How do we turn currency competition into cooperation? And there's some sense, some inkling that the type of, we're entering a new phase of currency competition. We used to think of currency competition as competitive devaluations. Everything was based on the value of currency. And the fund was partly established to try to set ground rules for currency competition. We're entering a phase, potentially, this is speculation and for the purpose of enriching our discussion, but we're potentially entering a phase of a new type of currency competition where, of course, the stability of value is primary, but where other elements come into play as well, and that is the technological technological appeal and user friendliness of currencies, and of course these network effects around currencies that could make currencies available and used on a very wide basis. So perhaps I'll end there. I just wanted to highlight these issues which we can pursue later with further discussion.
Thank you very much indeed, Tommaso. That's a wonderful introduction. Maybe I can bundle up a few of the questions that have come in, and if Navid and Neha have anything to observe, please yell at me. A lot of questions around, is the expression maintaining the stability of the international monetary system merely just code for saying by hook or by crook maintaining the hegemony of the US dollar? Or do we think we're moving to a different multipolar global currency system after a period of interregnum? And within that thinking, is actually CBDC becoming an element of, or yet another tool in the projection of soft power internationally, and is actually more of a policy tool globally than a payment tool domestically?
Shall I take that question?
Yes, please.
Yes, all right. Well, and these are excellent questions. And the only problem is that you're asking me to look into a crystal ball a little bit. And it's very hard to look into crystal balls. They're usually opaque, at least to me. But I think it's important to recognize what Undersecretary of the US Treasury said before, and that is that there are reasons why certain currencies are reserve currencies. And those reasons have to do with market depth, market liquidity, credibility of institutions, and the credibility of the rule of law as well. And these are not things that can be reinvented overnight. These are not things that technology can change overnight. And these are structural elements that will continue to matter and that only evolve slowly. Against that backdrop, what we have done at the fund to start thinking about this, and we're only starting, is to posit certain scenarios. So instead of looking in the crystal ball and saying, well, there's a 75% chance that the world would look like this and a 25% chance that it would look like that, we've laid out possible scenarios and thought through the implications of each of these scenarios on the international monetary system and on currency substitution and control of financial conditions internationally. So those scenarios, I think, won't surprise you. They range from the very niche adoption of digital currencies for things like remittances, to large-scale adoption in countries with relatively weak currencies, so high inflation, volatile exchange rates, imperfect rule of law, credibility of institutions, so large-scale, quote-unquote, dollarization. The third scenario is one I think that is potentially most concerning, and that is the widespread use of a privately issued digital currency in its own unit of account. So that scenario plays out in the following fashion. That is, a private company introduces a new currency. It's fully backed by an existing fiat currency. Usage rises very, very rapidly because of an established global network of users. And at some point, the currency goes fiat. The backing is removed, and it's in its own unit of account. It floats, and then you have issues of misaligned incentives, where users of that currency would be exposed to, quote unquote, the monetary policy stance of that private company that perhaps doesn't have their best interests in mind. That's the third scenario. The fourth scenario is a multipolar world that you were just describing. It's multiple currencies competing, and we have to take into account the possibility that that competition would involve both public currencies, so currencies issued by by governments essentially, and privately issued currencies issued by corporations. That's another dimension of the type of competition we might see.
And I think very much that's at the moment the OMFIF House view is that your fourth scenario of a multipolar world of multiple fiat currencies, multiple private currencies, both those linked to a fiat currency and completely self-standing, it is probably what we're going to see. That's our hypothesis. But let me, if I may, thank you very much for that, and let's pass to Naveed, who's operating here and now in the real world with an enormous amount of cross-border business. How do you see it?
Thank you, Phil, and good morning, good afternoon, and good evening. The topic of money, particularly digital currency, evokes, as you can imagine, strong opinions, especially if the discussion is along ideological lines rather than economic and practical lines. So John Hicks, a very famous British economist, said in 1930 that it is with peculiar diffidence and even apprehension that one ventures to open one's mouth on the subject of money. And I come to this subject with the same sentiment. We are a leading global bank, as you mentioned in your introduction, doing business in more than 160 countries and jurisdictions. And we are connected to more than 250 value transfer systems. We move about $4 to $5 trillion worth of flows every single day in 140 currencies. And we have over 200 million customers around the world. Our global experience as practitioners in consumer banking and credit, corporate and investment banking, securities, brokerage, transaction services, and wealth management informs our views on emerging topic of central bank digital currencies. Our stance towards digital money is in the context of overall economy and the financial system. If the economy and commerce is becoming increasingly digital, digitization of currency and payments is inevitable. And participants in the financial system, particularly central banks, have a very important role to play. But before I address the topic of digital currency, I would like to discuss how Citi has been working with policymakers, central banks, market infrastructure such as SWIFT, to improve the payment systems and adoption of digital banking solutions around the world. When I say digital banking, the context is that how we deliver fiat currency more efficiently through digital channels and through digital banking. So we launched two initiatives about 7 years ago Firstly, what we call Digital Money Index, and secondly, Digital Money Symposium. Digital Money Index tracks about 90 countries around the world for their digital money adoption readiness. So we evaluate these 90 countries along 4 pillars: whether or not government and market support is there, technological and financial infrastructure is available, availability of digital banking solutions, and whether or not participants in the economy and the market are amenable to adoption of those digital banking solutions. Based on these 4 pillars, we categorize these countries into 4 clusters: incipient, emerging, in transition, and materially ready. As the countries undertake effective initiatives along the aforesaid pillars, which I just mentioned, they move along the index to higher clusters. So our study suggests that 10% overall improvement in the index potentially leads to significant benefits to the participating countries. So I'll just list a few. Firstly, 220 million people likely to enter the formal financial sector. $1 trillion worth of new flows in formal economy enter the formal economy. Increase the tax collections of about $100 billion. Reduction in operating cost of retail disbursements, about $120 billion. And savings to the governments on its disbursements of various kind, $185 billion. Digital Money Symposium, which is the second initiative, is an annual event in London, which brings all relevant constituencies together to ensure that we discuss all the relevant issues relating to digital money and move forward in a coordinated and cohesive manner. We are also working with governments to assist them in developing policies to digitize different sectors of the economy in addition to the financial sector. We believe central bank digital currency has a role along the same continuum to make financial system and the economy more efficient and inclusive. Realization of these objectives will depend upon how these are designed and implemented, which our earlier speakers commented on. There are many design considerations for creating a CBDC, both technological and structural. And I guess Neha will speak to the technological aspect in a minute. Due to the centrality of currency and payments in the economy, unintended consequences can be a significant risk. So in order to be effective, CBDC must strike the balance between public infrastructure versus private sector solutions, the role of central bank money versus the commercial bank money, expanded access to digital money versus the risk of financial crime, which was touched upon earlier on, and interoperability versus the narrow application of the central bank digital currencies. Systemic implications, which were also touched upon briefly earlier on, also need to be considered. If the introduction of CBDC increases proportion of central bank money, there could be an incipient nationalization of credit, hampering economic growth, job creation, and social mobility. Payment systems work best as a public-private partnership, and payments with CBDC should not be an exception. Crowding out the private sector will stifle innovation and put central banks in the undesirable and onerous position of conducting policies and enforcing policies which are currently done by the commercial banks, such as KYCs, enforcing AML, and the other related policies. CBDC does not have to be universally versatile. It could be engineered solely for domains where there is a clear value. So for example, tokenized capital markets. And like Tommaso mentioned, laws, regulation, and policy frameworks need to be adapted and updated to make CBDC practical. So as far as Citi's role is concerned, with the above considerations in mind and in line with the responsibilities in the global financial system, we are very actively engaged with central banks and policymakers in the discussion of whether and how central bank cryptocurrency foster rather than jeopardize vibrant markets in payments and credit. So Citi contributes broad range of best practices that countries can adopt to stimulate the development of effective digital payments and systems. So I will stop there and happy to take, Phil, any questions you may have or the audience may have.
Thank you. That's a fascinating view from the front line. I've noted actually in recent months, major reports from central banks looking at digital currency, central bank digital currency, and they seem to be in agreement on 4 major conclusions, which I think you'll probably be in agreement with. One is that central bank digital currency will come. And it's not a question of if, it's a question of when and how fast. Some debate about whether it replaces physical cash entirely or whether it complements it, but everybody's tending to an agreement that it's going to come. 2, it has got to be a partnership between the public sector that has a duty to provide means of payments and the private sector, which is probably better placed to provide the infrastructure to do it. Some debates about where that's shared and how, but we've moved on from an idea that it was either public or private to a view that actually this is a joint enterprise. Thirdly, a need for the protection of fractional reserve banking, i.e. credit, but also almost the ring fencing of the existing banking system within that structure. And that's very, very interesting indeed. And finally, a growing agreement that interoperability, both in terms of technology and in terms of, if you like, product handover, are essential. So hence coming back to the Undersecretary's view and to Tommaso's view of a global interoperable system. All of which to me sounds like, yes, gradual change on to a maintenance of a more efficient status quo. So I'm now going to pass the baton over to Neha, who's spending her time busily thinking about how to upset the apple cart, I hope. So over to you, Neha.
Thank you, Philip. Hello, everyone, and thank you very much to CSIS and OMFIF for inviting me to this important conversation. So my name is Neha, and for the past 4 years, I've been the director of the Digital Currency Initiative at the Massachusetts Institute of Technology. We are computer scientists and open source developers who've been working on architectures for digital money since 2015. We have a mission to engage in neutral, rigorous research to help make it as easy to move value as it is to move information, while making the economy more participatory, open, and resilient. I hope this isn't controversial to say, but our financial system is not working for everyone. The poor have the least access and pay the highest fees. We've seen examples where very wealthy criminals have been able to flout AML and CFT rules in cooperation with large banks, and it took months for people in the US to receive their stimulus checks. At the same time, we're seeing massive economic digitization as more and more activity moves online. But we don't necessarily see the capacity to provide innovative financial products at scale. We have an opportunity today to rethink the way that value moves through the international monetary system at a very fundamental level, and to build the foundation for a more inclusive and innovative economy. But we must be responsible and cognizant of the technology and the incentives of the participants who are involved. Though we might be tempted to rely entirely on the exciting developments in the private sector for this innovation, the ethos of move fast and break things is not going to work for the innovative monetary system. It's not clear it's best to follow in the path of the internet platforms, even though the internet provides a very interesting model for how this technology might evolve. But the internet platform started as a very open competitive landscape and evolved to monolithic companies, which emerged with startling influence into all aspects of our digital lives, including civic discourse. As we engage in this next era of digital money, we need to be thoughtful and focus on open, accessible platforms which promote competition and choice. And of course, we have to consider the underlying tension between privacy and enabling our public policy goals to prevent criminal activity. This, to me, is the most interesting technical research question. Though those responsible for enforcement might be tempted by broad data access, we have to remember that there is real economic value to privacy. And in a world of competing currencies, which we might have, a currency that is not surveilled might be more appealing than one that is. We have to be willing to think beyond our existing AML pathways, which I would argue are just not working well enough anyway. An architecture which requires the government to see all consumer financial transactions does not seem in line with our country's privacy goals. The technology in cryptocurrency could provide a means of enacting policy ideas, like, for example, keeping low value payments private while enforcing other restrictions. Finance ministries and central banks responsible for safeguarding financial stability are rightly entering the fray to more deeply understand the risks and promises of the technology. In addition to this important research and development, we need to deeply interrogate new technologies and examine their underlying incentives. Understanding the risks introduced by new technology requires counsel from neutral, unbiased, and rigorous technologists. And this work should not be done in isolation, or we'll lose a valuable opportunity to learn from each other and to create a more interoperable cross-national system. So we at my group are honored to be engaging in a multi-year research initiative with the Federal Reserve Bank of Boston to determine if we can design, build, and test a robust digital currency platform that can meet the needs of a national retail payment system. The research that we're engaging in with the Boston Fed has two specific phases. The first is to build a platform that can meet key basic performance metrics related to throughput, security, privacy, and resilience. The second, which will follow and could take 1 to 2 more years, will test the impact of various design choices and the impact that they have on privacy and throughput. We're not establishing policy, but we are making sure that we understand very well the impact different policy decisions would have on technology capability and vice versa. This will help us inform future policy discussions as they occur. So thank you, and I'm really looking forward to this discussion.
Thank you very much indeed. Just a question from me before we get into a bit more of a discussion. There seems to me to be a vibrant debate going on between those who would see digital currency as replicating all of the current attributes of physical cash, i.e. including anonymity, privacy, or all those sort of things, and those who say, actually, that completely throws away the chance for such innovations as programmable money, smart money, and the ability of money to do things very differently for us. And actually, in a digital economy, particularly conditioned by COVID, we really don't need bits of paper with presidents' heads on anymore. What's your view on that?
Well, I think that there's a short-term, medium-term, and long-term sort of view in this space. Short and medium term, it might make sense to shore up existing systems or even to create new systems that more closely mimic the flow of money that we have today. However, I think we would really be doing ourselves a huge disservice if we didn't explore the potential of some of these more innovative technologies. I think that the jury is still out, so to speak, in terms of what type of effect they might have, but it's clear that they are already having some type of effect. And what we need to do is engage very deeply with the technology to see what's possible. And as I said, measure very carefully the risks involved. But I do think we would be doing a disservice if we didn't think about what an entirely new financial system might look like.
Thank you. Tomas, a question from a number of people saying, look, shouldn't we forget about CBDC and just think about a digital SDR, which I think is something to do with you?
Let me see. All right. Well, I think the SDR serves an entirely different purpose and has been introduced for a different purpose. But I think the question, stepping away from the specificities of the SDR and the way that we use the SDR at the IMF, there is this question, as you were raising earlier, of a synthetic hegemonic currency, which is essentially a digital currency that is backed by a basket of existing fiat currencies. That basket can include 1, 2, 3, 10 currencies, who knows? Why necessarily limited to the basket weights of the SDR? So the pros and cons of this hegemonic digital currency, right? It was introduced by Mark Carney last year, and though it raises a lot of difficulties and concerns. Who would issue it? Who would serve as a lender of last resort? Who would regulate it? Those are some fundamental questions that we know how to answer when we're dealing with government-issued currencies, and they become much murkier when it comes to this sort of hegemonic currency. And I think that right now, the focus is more on trying to improve the current system and trying to make accessibility to the existing reserve currencies, to make the existing reserve currencies more accessible for cross-border payments. So including in countries that have been de-risked from correspondent banks, that don't have the same access to international payment systems. How can we at least start by allowing those countries to participate in payments? Then we can think about potential future iterations.
But Naveed, how about the Sultan, an operating cross-border payment instrument deployed by a major global bank, backed in fiat currency reserves held in Fort Knox?
So, sorry, there's a bit of a noise. I couldn't pick up the message. Exactly.
I'm just wondering about a Citibank settlement instrument backed by fiat reserves, say, held at Fort Knox, that operate with your whole international banking network. So you no longer have to worry about currency exchange and so forth.
Yeah, my view is, I think, this whole debate around central bank currency, we need to put it in a much broader context. And I think the Undersecretary, Mr. McIntosh, alluded to it. The innovation and the evolution of these currencies, and I think the digital currencies supported by the banks, is likely to happen. The question, and we will obviously, within those, in those considerations which I just outlined, we obviously will embrace it. And it will certainly bring a lot of efficiencies to the financial system. The point which I want to make is that if you look at, in my sort of humble view, if you look at the world today, there is no centralized mechanism to move the world forward. It has to be collaboration, interoperability, all those concepts we talked about. Right now, there are two major issues in the world. One is economic growth, and secondly, productivity. And our view is that if policymakers, the businesses and financial institutions, and households, in other words, all economic actors in an economy, operate gradually or directionally on the digital paradigm. Governments are digitizing their economies, including the financial system. Businesses are embracing the same notion. Financial institutions are making their systems more digital, and of course, the extension of that is crypto. And households have the amenability, the confidence, and the level of sophistication to embrace that. And I think if we move in that direction, with that context, digital currencies are likely to happen a lot quicker. And of course, the benefit will accrue to the overall system as opposed to dabbling it in a little more isolated manner. So, but we are absolutely supportive of innovation because innovation is secular. That trend is secular. And by the way, some of the technologies which underpins it, which Neha talked about, can be the underpinnings of many of these digitizing efforts. It doesn't really just have to be digital currency. It can actually help the digitizing the entire economy.
At the last count, there are 85 central banks around the world currently working on, thinking about, or actively piloting digital currency, central bank digital currency. And the ECB, of course, was the latest to announce that that's the direction it's heading in. Can I just ask the panelists as our final question today, before we hand back, are we going to see a digital dollar? And if so, when? Neha, can I start with you?
Certainly. I'm going to invoke Tommaso's crystal ball here and say that unfortunately, I think that that is very opaque to me, and I know of no plans to issue a digital dollar at this point in time. If I were asked to predict broadly, I think that Tommaso outlined a lot of different potential directions that things could go. And it seems quite likely to me that the underlying fabric of money is changing, and those who are responsible for it are going to need to think about how to keep up and how to provide the world with its important services. So I think that we will definitely see digital currency very soon. It might not look the way that many predict it to look right now, but I think it will happen.
That's a fascinating insight, that actually it may not be a digitized version of what we currently use, but something completely different. We shall have to think about that. Naveed, do you think there'll be a digital dollar?
I agree with Neha. I think the innovation and now we are in the making of what is called fourth industrial revolution, and the confluence of all these different technologies taking the world in one direction, and that is operating on a very different paradigm. And in that context, digital currency is likely to happen. It's difficult to put a timeline on it. And when I say timeline, it's already being experimented in different places around the world. When it becomes meaningful enough to be relevant in the financial system, it's difficult to put a timeline on it.
Thank you. And the last word to you, Tommaso.
Well, thank you. So will there be a central bank digital currency, whether it's the dollar, euro, or anything else, is, I think, secondary. And so I think the answer is yes, there will be. It is a question of when and not if, I believe, in some country, not necessarily the US, of course. But of course, we have to remember that considerations relative to central bank digital currency are going to be very, very different depending on the country's circumstances. In some countries, it will make sense. In some countries, it will not make sense. Some countries have very efficient payment systems, don't have problems of financial inclusion, still have high cash usage, et cetera, et cetera. Those countries will not necessarily see central bank digital currencies in their immediate interest. They may get there at some point when their financial system becomes tokenized, for instance, and they need a cash on a token to be able to pay for assets, but that will come down the line. So I think we're going to see this work out differently in different countries and at different points in time. But in the next 5 years, 10 years, for sure, we're going to see some countries issue central bank digital currency.
Well, I think it'll be well before then. And I share everybody's views that actually we're in for a fascinating time. It is going to be multipolar. It is going to be multidisciplinary. There are going to be lots of interesting experiments taking place in all kinds of places. Some will fail, some will succeed. And I'm particularly taken by Neha's idea of something completely different that we haven't even thought of yet, coming to the center stage. We've covered a tremendous amount of ground. I think we could cover even more, so I look forward to our next gathering. I'd like to thank Tommaso, Navid, Neha for joining this barstool panel. I would also like to thank the ministers for and the Undersecretary for the more comfortable armchair debate. And I would like to thank Stephanie and CSIS for being such wonderful hosts, and pass back to Stephanie for final words. Thank you.
Great, thanks so much, Phil, and thanks very much to the panelists. That discussion definitely lived up to my expectations, and I do look forward to the next conversation on this topic. Just in closing, in the last minute that remains, actually just one point of clarification. There was some discussion on the panel on this idea of a synthetic hegemonic currency. Tommaso picked up on that. Phil, I think you said that you interpreted the Undersecretary's comments as an endorsement of that. I don't think that that's Treasury's position, so just want to clarify that point and not make news where news is not warranted.
No, you're absolutely right. I don't think he endorsed it, but anyway.
Yeah. But beyond that, I heard a lot here to follow up on. I think the direction of travel is clear. We don't actually know when and exactly how, but I think it's fair to say on digital currency and central bank digital currency that the direction of travel is clear. I think this issue of design elements, we spent a good amount of time on that. The Vice Minister highlighted that in his comments. I think getting more definition and more specificity around those design elements, and then agreement on who decides those design elements, both domestically and then how to multilateralize that agreement. I think there's a lot of material there for all of us to follow up on. So I look forward to continuing this discussion. Let me just add my thanks to both the Undersecretary and the Vice Minister for their initial comments. Phil, to you for your moderation, and to Tommaso, Navid, and Neha for your expert comments. I look forward to future gatherings. And with that, let me just wish everybody a good rest of the day or a good evening, and hope to see all of you again soon. Thanks so much.
Thank you very much. Really appreciate it.